Welcome to our January 2025 analysis of European mortgage rates with the last data up to November 2024. Today, we'll explore the dramatic changes across the continent with Maria and what they mean for homebuyers and the market.
Welcome to our comprehensive analysis of European mortgage rates. Today's video will cover 10 essential sections to give you a complete understanding of the current market situation. We'll begin with an introduction to set the context, followed by a current rates overview to establish where we stand today. We'll then explore regional patterns across Europe, examine monthly changes, and take a broader yearly perspective to understand the bigger picture. Moving deeper, we'll focus on major economies and their unique situations, followed by an inflation check to understand its impact on rates. We'll thoroughly analyze financing rates across Europe, discuss market implications, and wrap up with our conclusion. As a bonus, we'll close with a detailed 5-year chart showing mortgage cost trends across all European countries, giving you valuable historical context. Let's begin with our introduction. Let's start with current rates across Europe. We're seeing a remarkable spread, with Estonia leading at 4.73%, while Malta offers an exceptional 1.79%. The European Union average sits at 3.44%, creating a clear divide between northern and southern regions. A fascinating pattern emerges when we look at regions. The Baltic states, Estonia, Latvia, and Lithuania, consistently show the highest rates, all above 4.5%. In contrast, Mediterranean countries offer more affordable options, with Spain at 3.04% and Malta striking 1.79%. Central European countries like Germany and Austria maintain stable mid-range rates. Looking at monthly changes, we're seeing a clear downward trend. Estonia, Cyprus, and Spain led with 5% decreases, while most countries show modest declines between 1% and 3%. This suggests an overall easing of lending conditions across the continent. The year-over-year view tells an even more dramatic story. Italy shows the largest decrease at 28%, followed by Finland at 25% and Cyprus at 24%. Remarkably, Croatia stands as the only country with a positive change, showing a 1% increase. Europe's 4 largest economies present an interesting picture. Germany maintains a rate of 3.59%, while France offers a more competitive 3.17%. Italy, despite its economic challenges, provides an attractive 3.23%. Lastly, Spain has the lowest rate in Europe apart from Malta. Please have a look at our dedicated video on Spain to discover why Spain has the lowest rates in Europe and why it is still interesting to invest in Spanish real estate. All those mortgage levels show how larger economies keep rates relatively affordable. The good news is that inflation is back under 3%. Last but not least, financing rates for banks remains elevated, so we don't expect mortgage rates to fall much further in this environment. A slight majority of buyers take fixed-rates mortgages in Spain. How expensive are mortgage rates in Europe in 2025? With inflation at 2.4% and current financing rates in Europe, the average cost for a mortgage in Europe is not expensive at 3.4%. To conclude, let's review the 5-year history charts of the mortgage rates in all European countries.
Why consider investing in Spanish property? The answer combines both financial wisdom and lifestyle benefits. From a financial perspective, Spanish real estate offers remarkable value, with average property prices currently under €2,000 per square meter. This makes it one of Europe's most accessible property markets. But the benefits extend far beyond the financials. With Howtobuyinspain.com, we simplify and make safer the property acquisition in Spain. You will benefit from our local expertise, which means 1. An in-depth market knowledge, 2. Top legal and financial assistance, 3. We prioritize your interests, not the sellers. At How to Buy in Spain, we unlock all the doors to your Spanish property.